please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, shifting focus to the aviation space, India is great in terms of growth, but not in terms of making money. That's an honest confession coming in from Alexandre de Juniac, the DG and CEO of International Air Transport Association. Speaking to Shireen Brand from the sidelines of the International Aviation Summit in India, the IATA DG highlighted that infrastructure constraints and excessive costs were putting pressure on profitability of Indian airlines. Here's a slice of that conversation.
The point is that we have constraint on the supply side, mainly because we have infrastructure constraint, not enough airport, probably an air traffic control that is not able to cope with future growth if the right investment are not made, on the one hand, and excessive costs that are putting a lot of pressure on the P&Ls of our members, the airlines. So the airlines are having a growing market, but enormous cost due to various factors. First of all, the fuel price. Secondly, the decline in the value of the rupee, whereas they bear costs that are labeled in dollars. And thirdly, there are various other costs, taxes, charges, fees, that are also putting pressure on their profit and loss account.
Talk about this business of how airlines are dealing with what has now become a price war, a discounting war that we've seen in the market. I mean, your members complain about the fact that the government is imposing excessive taxes and levies, but how are they making this much more sustainable? Every CEO we talk to talks about the unsustainability of discounting, and yet we see another scheme being launched. Is this unusual? Is this a practice that you see in other mature markets?
In fact, we have seen some price wars in other markets. In Europe, for instance, there is a very strong, very tough competition, and it leads to very low fares. We have seen that in the US in some period, not now, but in the past. We see that in Southeast Asia. So there are other areas in the world in which competition is so hard that the prices are very, very low. And India is one of them. India is one of them, but that's the market and that's competition, and it will be regulated naturally by the market forces.
Isn't it the responsibility of the aviation sector, of the airlines themselves, to also ensure that they remain viable?
For sure. No, so I do not ask government to do everything. It's a shared responsibility between the airline and the government to cut costs.
Given the demand outlook, while the industry is facing tough times today, perhaps in the midst of a cyclical downturn, but given the demand scenario, do you believe that there will be takers, foreign airlines, who would want to invest in an Indian carrier today? The FDI limit is 49%. Do you believe that they would want to invest in a legacy carrier in India today, or perhaps even set up operations in India?
First of all, everyone must be aware that these foreign investment limitations exist almost everywhere. So in India it's 49%, but it's also 49% in the EU. It's 25% in the US. So it's something that is existing everywhere, not mainly for economic reasons, but also for sovereignty reasons, for the connectivity of the country, the political interest to have a national or national carriers. So that's an approach that exists everywhere. Secondly, should it prevent foreign investors to take a stake in an Indian carrier? No.
All right, interesting commentary coming in there from the IATA. But let's move on to retail then. CNBC TV18's Priya Sheth caught up with CP Toshniwal, who's the Executive Director at Future Lifestyle, as well as the CFO of Future Retail, from the sidelines of the Retail CFO Summit, which is underway, and began by asking him his expectations on the demand and the growth of the company in comparison to last year. Listen in.
So I think demand is looking good. The Independent Day promotion has worked very well as per our expectation. In festive, we are all geared up and prepared for our festive collection in fashion with a large collection. We also have come out with our gifting collection for the festive season in food and FMCG businesses. Dry fruits and chocolates, and those are the big categories to grow out there. Overall business, we are looking at mid double digit same-store growth will be emphasized for the festive season, and overall the business will be growing around 20% or so. In terms of a new store rollout also, there are stores in pipeline which will be smaller store rolling out has gaining a momentum now. Right now we are opening with 2 stores a day around. Now next month onward we are picking little pace out there, opening a 3 store a day out, 100 store a month kind of.
There are several new tie-ups that Future Group has been looking at in terms of category expansion, in terms of adding new products to your overall portfolio mix. So what can we expect going forward in terms of what kind of new tie-ups? Are you looking at more foreign players bringing new products into the market?
You see, so recently our group company has done a joint venture for the dairy business. We believe those fresh bakery and dairy are the businesses which can be growing, and dairy is also right now growing a pretty good pace out there. We are doing a JV with the global major out there to give the latest modern product in dairy sector to the consumer.
In terms of overall growth numbers, if you compare FY19 growth, do you think the growth is back to a pre-demonetization or pre-GST levels? Do you see significant upside going forward?
I think the GST, the full 1 year is just completed. Now the number will all start looking year on year comparable from this quarter onward. Till now, because that a GST adjustment has to be done, then a lot of growth numbers are not looking like to like. Now it will start looking, and I think growth numbers are looking okay.
You know, as we speak, there is a lot of interest in Future Group, specifically in future retail, where we're seeing several global players going ahead and approaching Future Group for possible stake big buy. What is the status on that at this point in time?
So we being a listed company, the FPI route is open for up to 10% in the company, and we don't have anything at the moment. So as and when it will happen, it will make that.
Okay, time for a break now. But up next in the Fortis Health saga, Shivinder Singh has now dragged elder brother Malvinder Singh to the NCLT court.
Welcome back. You're watching Power Breakfast on CNBC TV18. Let's move on to some stock-specific news now. SPARC's Halol plant has now moved to a voluntary action indicated, VAI as we know it, versus official action indicated. The management held a conference call last evening. Ekta is here with the key highlights of that. Ekta, what does this mean for the company?
Well, actually, SPARC is the R&D arm of Sun Pharmaceuticals, and they on and off, hold investor presentations and investor calls in order to update the entire investor community about their research and development pipeline. So this is exactly what they had done, and so it was par for course in terms of the kind of updates that we heard from the SPARC management. Now, we all know that Halol's plant has shifted to voluntary status, voluntary action indicated status, which means that the US FDA issues are pretty much over with the warning letter being lifted, etc., and versus an official action indicated status. Now, we already knew about that from the Sun management, but it was reiterated by the SPARC management yesterday, where they said that Halol's voluntary action indicated status will now help SPARC pursue important opportunities in drugs such as Zelpros and Ellipsia. Now, both these drugs are going to come up soon from the US FDA in terms of a review by them. Zelpros is basically an eye drop, and Ellipsia is basically an anti-epilepsy drug. So what this is probably going to do is that it just gives a little more clarity that they're going to be pursuing these opportunities from the Halol facility. Plus, they said that they're going to be pursuing site transfers for these particular opportunities in order to negate the risk, but that's going to be at a low intensity going forward. Separately, the company said that they are in active discussions with partners on programs, and that would be the normal course of business for a company such as SPARC, because they have many drugs under development. If in case there is a partner who comes in who would be stronger in terms of funding, in terms of, say, marketing ability, etc., that would be normal for them to probably partner with them. So they've reiterated that they are in active discussions with partners on programs. So generally, the tone was largely positive from SPARC, but nonetheless, it is a lot of what we've heard before as well from the company. But nonetheless, let's listen in to the management.
Our partner's manufacturing plant supporting LFC and Cellpros has moved from OAI, that is official action indicated, to VAI, which is voluntary action indicated. The shift in compliance now allows us to pursue marketing approval from the Sun Halol plant. This regulatory turnaround is certainly a positive for SPARC, allowing us access to additional milestone payments from our commercialization partner and a potential launch in early 2019. SPARC has received complete response letters for both these products, citing manufacturing site compliance inadequacies. We have responded to US FDA indicating compliance readiness of the manufacturing site, and that allows us to get back to the regulatory queue with FDA. We have initiated activities related to the possible site transfer as a backup manufacturing strategy for these products. We will continue to maintain some of the preparatory activities, but on low intensity mode.
All right, so that's as far as SPARC is concerned. Meanwhile, let's watch out for some important corporate development that took place yesterday. Surprising, last evening, Shivinder Singh dragged his brother Malvinder Singh to the NCLT court. Ekta, what does this mean, and does this impact Fortis or any listed stock?
No, there is no stock which is going to be impacted when it comes to this particular case. It is between Malvinder Singh and Shivinder Singh and Sunil Godwani. And remember that Shivinder Singh and Malvinder Singh stepped down from the Fortis management as well as the Fortis board as well as the SRL board earlier this year. Remember that there was a press release by both the brothers in Feb of 2018 saying that, you know, they are stepping down from the Fortis board, and that basically disassociated Fortis from any sort of a liability which would come with a potential deal, which eventually they struck with IHH. Now, separately, just want to point out that this is definitely a very important corporate development. It's a corporate development because it goes back years in terms of the kind of legacy they built post, post the father passing away and his early demise. But separately, it was, eventually the Ranbaxy sale to Daiichi and also the building of Fortis Healthcare as well as the Religare NBFC. So there's a lot of history which is attached to both the brothers and the kind of camaraderie and the kind of joint decisions that they used to make. So with that, this actually comes as a big surprise from a corporate development standpoint as well and from a corporate history standpoint. So the news is that Shivinder Singh has filed a case in the NCLT court against his elder brother Malvinder Singh, who was in terms of the active management of Fortis, as well as the ex-head of Religare and RHC Holdings, Sunil Godwani. Now, Shivinder Singh has cited oppression, mismanagement at RHC Holdings, Religare and Fortis for this decision. Remember that Shivinder Singh had already stepped down from Fortis in September 2015 to join that spiritual movement that he became a part of, which is RSSB. Now, Shivinder Singh has said that this action has been long overdue. He hoped that better sense would prevail, but now he's disassociating himself from his brother as a business partner and will pursue an independent path going forward. He has cited decisions such as those taken in the Religare NBFC arm, sale of Ranbaxy, and their private charter business Ligare. Now, separately, I just want to point out that there was a recent planted media articles which Shivinder Singh has said in his press release, attempting to put responsibility on an elder in the family, compelling Shivinder Singh to break his silence. This is important because these recent articles, we are assuming, is linked to the Baba or the head of the RSSB, where there were many articles which had linked many dealings which had taken place between the head of RSSB as well as the business of Fortis as well as Religare. So one of the reasons why he's broken his silence is because of this.
All right, keep getting to learn new things every time, Ekta. But talking about learning, it is Teachers' Day today, so wish everyone a very happy Teachers' Day. And this Teachers' Day, I caught up with the illustrious mentor-mentee duo Bharat Puri and Chandramouli Venkatesan of Pidilite to share their journey of working together as mentor and mentee at not just Pidilite but Asian Paints and Cadbury's as well. You guys have worked at Asian Paints, you guys have worked at Cadbury's, and now at Pidilite as well. Give me some stories where, you know, there were incredible changes made because of this relationship.
Molly is one smart, intelligent, and as I used to pull his leg, a straight logical engineering thinker.
Okay.
Now he came into communication. We were launching a premium emulsion, Royale, which is now launched. And I still remember, I told Molly, the agency is not getting the shade names right. You have to sit and work and get some shade names.
Right.
Oh, that was great fun because Molly, being engineer, said, you know, X pink, pale rose. Molly, it's a premium. You have to make the shade names come alive. Oh my God, I had great fun with him, and he would like it. I remember one day I walk into office and he's sitting with a dictionary. I said, Molly, what are you doing with the dictionary? Arey, otherwise you are not going to improve. You're not going to approve my shade names.
Talking of Asian Paints itself, I think I would say possibly one of the contributions that Bharat and me made to that company was moving that company from an interior paint company to interior and exterior paint company. Two of the iconic products of exteriors, Apex and Ace, we launched as a team.
So let's turn the clock back. You went to a very famous school which had a famous classmate. I want to know that story.
I went to the Lawrence School, Sanar.
Okay.
And, you know, amongst my classmates, Sanjay Dutt was a classmate of mine. Yeah. And the school had lots of distinguished...
Are you featured in the film that recently came?
No, fortunately the film doesn't start from school. But I mean, Sanjay was, we were together in school through many years. And I must say, he was actually a very sweet person.
Talking about sweet, go to Cadbury, of course. It's a natural segue that you guys gave it to me. Anything that you all learned from Cadbury?
The year before I joined, and Bharat was, of course, in the thick of it. It was 2004. 2003, 2004, and the worm crisis that hit Cadbury, and Bharat was a leader there. And I think I kind of really learned by observing, but just observing how such an extraordinary crisis can be handled. First, crisis management, but secondly, actually using it as a change opportunity. And I think, honestly, prior to that crisis, Cadbury was a big brand name, but a moderate performing company.
It's interesting that, you know, we're talking about this on Teachers' Day, and it's not just individuals, it's also events that teach a lot of things. Bharat, it's stuff of B-School legend. I just want to hear it from you.
Firstly, I must tell you, as CEO, you get the credit when things go well, but actually it's the whole team that manages it.
Right.
It's something, frankly, you would not wish even on your enemies, because, you know, when you're in the thick of it, it's coming at you from all ends. Morning, 7 o'clock, from when you pick up the morning newspapers to midnight, where you've got calls, extortion. So it is something which, and I still remember my chairman then, the company chairman, Sir John Sunderland, told me, Bharat, you don't realize it now, but you know, this is a privilege that you're actually going through this. And I thought, what has this man been drinking last night? But actually, he was fully right. Today, when I think back upon it, it was one of your great learning experiences. Because that's the time, A, you're tested, B, you have to keep taking decisions on the spot. And, you know, the expedient versus what is correct. I mean, that's the time, you know, as they say, honesty is only tested on an empty stomach. I think what we were really proud about was doing the right thing. You know, we just said 3 things. A, we will not do anything that we will regret later. B, consumer first. Forget everything else. It's the consumer who matters. And C, no blame games, no blaming fellows. Anybody can fall down. It's about how quickly we get up. And as a team, I think I was privileged that I had a wonderful team. And, you know, 7 months later, we were back.
You spoke about that wonderful team. Tell me about that salesman in one of your conferences which spoke about Amitabh Bachchan. Gave you that idea?
Yes, absolutely. This was a young salesman called Amit Upadhyay. I still remember his name. So he puts up his hand and says, Sir, hum Amitabh Bachchan ko kyun nahi lete hain? I said, Amit, kyun? He says, Sir, देखो इस देश में लोग 2 ही आदमियों की बातें सुनते हैं. One is the late Mr. Vajpayee, who was then the Prime Minister, and the second is Amitabh Bachchan. So, you know, and when I was driving back to the airport, this was in Surajkund, which is a little outside Delhi, I thought, listen, there is merit in what he's saying, and obviously we can't get Mr. Vajpayee, and that's how we started with Mr. Bachchan.
Thank you so much for that. Well, when it comes to the currency space, we have seen the US dollar strengthen back yet again. There are inflation concerns in Turkey. The South Africa, as an economy, seems to be getting into a recession, and the safe haven buying is definitely happening in dollar and US treasuries, etc. The only point to look forward to today would be the US and Canada talks, which are due to resume today after they yielded no result last week. So that is one thing that the markets will keep some hopes on. Apart from that, the US-China new list from US is expected out by this Friday. So that, of course, is keeping the metal prices under pressure today. There also has been some profit-taking that we've seen in crude, as the Hurricane Gordon impact has not been as strong as expected. Almost a dozen platforms at Gulf of Mexico were shut in anticipation of a landfall in that area. But the storm has shifted eastwards, and the markets do not see any supply concerns now coming in because of the hurricane. So that's taken that premium off the prices too. So the kind of highs that we saw yesterday, a 2-month high on both the crude varieties, that seems to have come off a little. But the markets will continue to keep an eye on the Iran sanctions and the impact of that on the global markets. And that is what is keeping these prices supported as of now.
Right, Manisha, thanks a lot for that. We shift focus back to the equity space, and in F&O, remember, it's just been 3 days to the September series, and the Nifty has lost about 150 odd points. In doing so, what has happened is fear has come back a little bit. India VIX this week itself is up almost about 10%. So that's telling you, yes, there is some selling in index futures, and then there is some purchase of index puts. So let's delve a little deeper into that. The FIIs yesterday, they sold about 350 crores in index futures, but over the last 3 trading sessions, they have been adding shorts in index futures itself. 14,700 on the first day of the series, 4,500 yesterday, day before yesterday that is, and September 4th was 7,400. So in the last 3 sessions itself, the FIIs have added close to 26,000 short contracts, and this compares with just about 4,700 long contracts in index futures, and that's taken the FII long positions, which was at 64%, a multi-series high at the open, to lower below 60%. Now it stands at 57%. So that is something we will be keeping an eye out on. And on the lower end, we're seeing some protection buying. Over the last 3 sessions, FIIs have added a fair amount of long puts. In fact, in the last 3 sessions itself, the FIIs have added 77,000 long puts, and that compares with about 22,000 long calls. Some believe that the markets are going to be range bound, which is why we're seeing both short calls and short puts added over the last 2 trading sessions, over the last 3 trading sessions, to the range of 32 to 35,000 contracts. 11,500, that is the deciding mark, because it's the lowest, it's the highest open interest in terms of the lower end. And remember, in the previous series, 11,500 call was an important resistance. Once we conquered that, can this be an important support or not, is something we will keep an eye out on. Just watch out for Adani Enterprises. Today is the ex-date for Adani gas demerger, and that stock enters F&O ban. All these contracts which are there will be expiring today.
Okay, all right. Thanks, Mangalam, for that. On that note, we're going to wrap up our breakfast. Stay tuned. Bazaar Morning Call up next.